Hi students, so welcome back to our class number 8 of Cost and Management, Accounting and Financial Management. So we are in chapter 1 decision making and on the topic of transfer pricing. Okay, so here on the transfer pricing, I think this should be the last problem. So I'm covering one problem in our in this video, and you can okay. And after that, there are a lot of, I think, 40 to 40 plus additional problems are given related to marginal costing in the book. I will be covering that also in upcoming videos. So the problem which we are going to discuss today is also very important from exam point of view. So watch this. And also many students have said that we are not getting updates about the further videos. So I used to share in I have shared in various platforms in Facebook as well as through WhatsApp group, and also we have started the Telegram group. You can see the comment section of our channel. So you can see the community comments. We have posted the Telegram group. You can join there also. So I have started circulating the theory materials through the groups. So once in a while I will also share the theory materials, and please save all those separately from the exam point of view. And I will also post separate video for theory. Okay, so let's go ahead with today's class. And also many students has asked that they have not getting updates. So right next to your subscribe button there will be a bell icon. You can also click the bell icon so that as soon as I upload the video you will get a notification of the video. You can save it and you can watch it at your leisure. I know today your exams has been completed and you will have a free mind. So many of the students who are preparing can also save that, so that on full swing, I think post February full swing preparation you will start. At the time you can watch, and before that you can just have a look at the video and save it accordingly with appropriate name, maybe even in your laptop. And best version is to see in the laptop. I saw one of my students when seeing in the laptop, they had a very good feel of the video, because since I'm making in slide, I'm just congesting the slide as much as possible, so that too many slides should not be there in the video. So you may feel congested by seeing in the mobile. So I request the zooming also you cannot do as much to the greater extent. So I suggest you can see in your laptop, and also you can save in a separate folder and watch it accordingly. Okay, so let's move on to the today's class. Okay, so this is also we are in the transfer pricing topic, and transfer pricing total costing based problem. This is a little bit complicated, okay, because since it is the last illustration in this topic, of course the difficulty level is going to be very high. So PH Limited manufactures and sells two products, namely BXC and DXC. The company's investment in fixed asset is 2 lakh. So the company has invested 2 lakh in fixed assets. I'm sorry, the working capital investment is equivalent to 3 months cost of sales. So okay, so we have already seen the total capital employed by the company will be divided into the fixed asset portion, and next is the working capital portion. So fixed asset 2 lakh they have put money, and in the working capital they have put money equivalent to 3 months of cost of sales of both the products. Okay, so cost of sales of BXC plus cost of sales of DXC for 1 month multiplied by 3 is the 3 months cost of sales, and that is equal to the working capital. Okay, the fixed capital is financed, the 2 lakhs which we discussed earlier is financed by a term loan with an interest rate of 11% per annum. Next, coming to the working capital, half of the working capital is financed through a bank borrowing. Interest rate is 19.4 percentage. Other half of the working capital is generated through internal resources. So which means from our own previous year's profit, we have financed our 50 percentage of working capital needs. The remaining 15 is through the bank loan at 19.4 percentage interest. Okay, let's go to the operating data of 15-16. This shows that production is 5,000 of BXC, 10,000 of DSC production. Okay, production units. Next, direct material cost is given 4 rupee per kg. How much kg is required for each case, that is given. Material B also it's given. Direct labor hours, so it is given in hours. You should not take this as the amount. It is 5 hours and 3 hours. Okay, you have to be very careful with the unit of measurement, guys. At the time of exam, there will be a lot of pressure that will be mounted up to you for answering the questions. Do watch the unit of measure very carefully. Next comes the direct wage rate. Okay, so direct labor, they have given the hours here. So wage rate 2 rupees per hour, that is given. They have given separate. They could have multiplied this 2 by 5 and they could have given 10 rupees here, but they have to complicate because the difficulty level is very high. And also we are a we are a professional, we are getting a professional qualification. There will be twists and turns, and the same way while you are after your qualification of CMA, while working in the company or in a factory also, you will have a lot of this twist and twists in your work nature also. Okay, so we finished the topic of direct labors, and next comes the factory overheads or recovered at 50 percentage of direct wages. Okay, administrative overheads are recovered at 40 percentage of factory cost. So what is factory cost? The cost till factory overheads is factory cost, the material and then labor incurred to assemble it, and then the item comes, and you have to spend material plus wages, everything put together, plus the factory cost, or you will call it as factory overheads, that everything put together a factory cost, and something comes out as a material outside the factory, so that is costed at factory. And lot of administration department will also work on it, so the admin overheads will be added to it, and it becomes a completed end item. And then this will be taken for sales, and selling and distribution expenses will be incurred at 2 rupees for DXC per unit and 3 rupees for DXC per unit respectively. So that is the selling and distribution. Now up to selling and distribution cost, everything totaled up, it gives the cost of sales. That is a basics of costing. So now the company expects to earn a after tax profit. So profit after tax, you have to say it as PAT, profit after tax, or you can also say it as earnings after tax, EAT. Okay, 12 percentage on capital employed. So we know what is capital employed, which is the fixed asset, how much you have invested on the fixed asset and how much you have invested on the working capital. Okay, so now the income tax rate is 50 percentage, so that also they have given. So let us answer the question number 1 here. So what is the question number 1? Prepare the cost sheet showing the element wise cost. So element wise cost sheet most of the time it will be per unit basis, but per unit also you can have one column multiplied by the volume of 5,000 or 10,000, and you can put the cumulative cost also in the other column. But here I have put only the per unit cost. You can also mention this is BXC per unit, DXC per unit, and you can also put the production quantity in 2 columns, and then you can multiply the per unit multiplied by the production quantity, the total cost also in the other column. Okay, so here material cost, yes we know, which is 1 kg is required, 1 and 4 rupee per kg, 1 into 4 is 4 rupees, and 4 per kg, 4 into 0.75 is 3 rupees. Okay, so material A we know the cost, material B the same way you can find the cost of material B. And we are going to direct labor. Direct labor is 5 hours, 3 hours. So 5 into 2 it is 10 rupees, and 3 into 2 it is 6 rupees. Yes, we have brought in here. Factory overheads, yes, it is given as 50 percentage of direct wages. Yes, 50 percentage of 10 rupees is 5 rupee, 50 percentage of 6 rupees is 3 rupee. Admin overheads are recovered at 40 percentage of factory cost. So factory cost, so we have to find the factory cost. What is the factory cost? Here there is a twist. Factory cost is 40 percentage of, there is a high probability you will do 40 percentage on the factory overhead. That is not right. Here they have clearly mentioned it is factory cost. So factory cost is material cost plus direct labor cost plus factory overheads, putting together factory cost will come, and on that factory cost 40 percentage. So in this case 4 plus 2 is 6 plus 10, 16 plus 5 is going to be 21, and 40 percentage on 21 is going to be 8.4 rupees. Accordingly apply for the DXC also, and the administration overhead is found here. Okay, next step is selling and distribution expenses, because that is the cost sheet. We have to put the cost sheet till the cost of sales. Okay, so 2 rupees and 3 rupees it is given, so 2 rupee and 3 rupee it is taken here. So if you add all the top, it comes the per unit cost of sales. So it has to be per unit cost of sales 31.4 and 22.6. And we also have the production quantity of 5,000 and 10,000. We are multiplying this and we are finding the total cost of sales as 1,57,000 and 2,26,000. So this is the total cost of sales of BXC and DXC. Now we will go back to the question what is asked. So we have to find the cost sheet, which we have already done. Okay, and total cost, profit and selling price per unit of both the products. Okay, so we need the selling price because we are sitting in the topic of transfer pricing. Of course, the transfer price is needed. Transfer price is nothing but a selling price only. So here in this case, they have mentioned the word selling price because they have not mentioned about another division which is going to buy this item or something. They have not mentioned that kind of thing. Okay, so here we can fix the selling price. Okay, and yes, for this what we need to do, selling price has two components. Okay, so it has a cost portion and it has a profit portion. Okay, so which means we have to find the profit portion before going to the selling price. And it's good that our book has also given to find the total cost profit before finding the selling price. So we have to find the profit based on the total cost. So what is the total cost? Total cost is including the fixed cost, everything putting together, that is the total cost. We have found the cost of sales itself. Now we have to find the profit to be added to this. Okay, so what is the profit? Profit is something we can take it as target profit for the year or budgeted profit for the year, or the management what it expects as a profit for this year. Here there is given a statement in the question, the company expects to earn a after tax profit of 12% on capital employed. Yes, we know what is capital employed. I have calculated here also. Fixed assets 2 lakhs is the capital employed. It is given in the question. And working capital, there is a twist. 3 months total cost of sales. So what is 3 months? Okay, here we are doing that total cost of sales. Here you know the cost of sales 1,57,000 and 2,26,000, but this is for the full year because we have multiplied by the full year production quantity. So here it is given as production per annum. Okay, for the full year 5,000 and 10,000. So this is the cost of sales for the full year. So full year data, how to convert that into 3 months data? So divided it by 4, you are going to get 3 month data. So 1,57,000 plus 2,26,000, the result is divided by 4, which comes to approximately 95,750. So here I have putting in everything into lakhs. So it has come to 0.9575. When you add this to 2, it comes to 2.9575. I have just round off to 2.96. So it is actually 2.9575. I request you to do everything in the question while you practice in the absolute numbers itself. Here for shortcut and reduce the space, I have put the figures in the lakhs. Okay, so do follow your own approach. Okay, and amount column, if you are going to put in lakhs, in the amount column right after this you can put a bracket and put lakhs. Since there are a lot of figures already in per unit level, if you put in lakhs, it may be little bit confusing for some people. They may think that is a per unit and they may multiply over and above that, they may multiply the production quantity and do some mess in the problem. Okay, so request you to go on a way that is easy and flexible for you. Okay, so now what is the profit the management is expecting is 12% on the capital employed. We have found the capital employed as 2.96 and 12% on this 2.96 is going to be 0.35490, which is nothing but 35,490. Here also the things is lakhs. Okay, that's why it is 35,490. 12% on capital employed we have found, but it is clearly said that it is after tax profit. So it is profit after tax or PAT. Now we have to find the profit before tax. So how to find the profit before tax? So from profit before tax, the tax is reduced and then profit after tax comes. So here the tax is 50%. So from profit before tax, 50% is cut and it goes to profit after tax. So now we have to add the thing that is cut. So which means you have to divide by 50% the profit after tax so that you get the profit before tax. So dividing by 50% is nothing but multiplying by 2. Okay, so that 35,000 is multiplied by 2, you get 70,000 profit before tax. Now this profit before tax, so what is our objective? We should not forget, our aim is to find the selling price per unit. Selling price per unit for both the products separately. We have cost of sales of both the products separately, but profit before taxes we are not having it separately. So we have to allocate the profit before taxes for these two products, so that for the each product profit before taxes found, and this will be divided in the per unit level, and that will be added to the cost of sale, so that the cost plus profit you can derive the selling price of the items. So here is where the real complexity of the problem is there. Okay, so 70,000, it is not a very simple allocation. It requires little bit of uh, concerned efforts. I suggest you have to remember this very carefully. Okay, so we have to allocate the profit before taxes, and for allocation we know that company need 12 percentage on capital employed. Okay, capital employed is having the two components. One is the fixed asset component and other is the working capital component. In this problem, the fixed asset is proportional, or it is directly related to one factor with which we will allocate the fixed asset returns that a company expects, and working capital is proportional to some other factor, and we are going to allocate the working capital returns that is required in some other ratio. Okay, let me not confuse you. Let me take it in a straightforward way. So fixed assets 2 lakh is there. In this 2 lakh, the company needs 12 percentage return. Okay, so this 12 percentage return, how much it will be? So 12 percentage on 2 lakhs is going to be approximately 24,000, but this is after tax. So divided by 50 percentage is nothing but multiplied by 2. So 24,000 multiplied by 2, approximately 48,000. So 48,000 rupees company needs as a return from the fixed asset component itself of the capital employed. So capital employed has a two component, which is fixed asset and working capital, and fixed asset alone the company needs a return of 48,000 rupees. So this 48,000, how it should be allocated to BXC and DXC? Yes, here there is a clue given in the question that factory overheads are recovered at 50 percentage of direct wages, which means the whole overheads of the factory is some other way related to wages, and it is varying in the same line of the wages. So I'm using the wages rate. Okay, direct wages. Here we have the wages here. Where is the wages? Yeah, direct labor you have here 10 and 6. You can take the ratio of the total wages. Okay, you can multiply by the 5,000. That will be the total wages. So total wages when you take, so which is 10 rupees multiplied by 5,000 and 6 rupees multiplied by 10,000. So this component, which is nothing but 50,000 and okay, 50,000 and 60,000, you can just take the ratio of it and it comes to 0.45 and 0.54. Okay, you can total it will come to 1. Okay, so I'm just allocating in the wages portion the fixed asset return. Why? Because factory will have all the fixed assets and all the processing of material will happen through the machineries or the fixed assets. Okay, so that's the reason the fixed asset returns is allocated in the wages ratio, because in this question there is given a clue that wages is the determining factor of the factory overheads. Okay, factory overheads is 50 percentage of your wages. Okay, so we are applying this allocation methodology. So total wages, so guys, what is the per unit total wage multiplied by the production quantity? What will be the total wages? In that wages, what is the proportional? So you know to find the proportion, right? So A and B are the two component. This is 5 rupees into 10,000 and this is 6 rupees into 5 rupees into 5,000. 5 rupee of 10 rupees of wages into 5,000 production quantity, 6 rupee of wages into 10,000, and this 50,000 and 60,000, what is the ratio? It is 45 percentage on one side and 54 percentage on the other side. Okay, now you allocate this 48,000 accordingly. So now you have found the profit before tax through fixed assets. Okay, for the both the components BXC and DXC. Now we have one more thing to be found, the profit before tax of the working capital component. Okay, so what is the working capital? Yes, we know it is 95,750 working capital return of 12% because company needs 12% on capital employed, which means 12% on fixed assets also, 12% on working capital also. 12% of fixed assets, yes, we found it is 24,000 and profit before tax is going to be 48,000 and that we have allocated. Now we are coming to 12% on the working capital portion. Working capital portion is total investment is 95,000 and in this we are going to get the 12% return and that 12% return is profit after tax. So divided by 50%, it's going to come approximately 23,000 is the total working capital return. So this has to be allocated on what ratios? There is a clue for here also. Here it is given half of the working capital is yeah, working capital investment is equal to 3 months cost of sales. So working capital is related to cost of sales. So here we are going to allocate the working capital on the ratio of cost of sales. Yes, we have the cost of sales figure 1,57,000 and 2,26,000. So we have to take the ratio between this. So that around comes to 40.9% and 59%. So this is the allocation. So now we have the 23,000 figure, which is the total return expected by the management out of working capital, and this 23,000 is allocated between the BXC product and DXC product, 9,400 and 13,000 based on the ratio of cost of sales. So we have the profit required from working capital, profit required from fixed assets. We have already calculated. We have the cost of sales. So cost plus profit is going to come to the selling price level. Okay. So now the total sales, we are going to find the total sales is nothing but the cost of sales. Yes, we have the figure already, 1,57,000 and 2,26,000 plus the fixed assets return 21,000 and 26,000 plus the working capital return 9,420 and 13,560. Everything put together, the total sales value is found as 1,88,000 and 2,65,000 approximately, and selling price per unit is nothing but this sales divided by the production quantity what we have, that is going to give you the selling price per unit. So there are a lot of twists in this question, guys. Okay, and the first point where you can go wrong is direct labor hours. Here the numbers are given in the hours. Okay, the second point where the students can go wrong is 50% factory overheads is 50%, administration overheads is 40% of factory cost. It is not factory overhead, it is factory cost. Okay, and if you are lucky enough and you are going in the right direction, okay, the third place where you can go wrong is allocation of fixed assets return. It has to be in the wages ratio. Okay, and if you have passed this stage also, the fourth place where you can go wrong is working capital return. It should be allocated in the cost of sales ratio. And if you have cleared all this, it's going to be a cakewalk after this. It's going to be very easy. Okay, you are just going to find the total sales divided by the number of unit. You are going to find the selling price per unit. Okay, so the question number 1 is answered. Let's go for the question number 2. We have to find the net profit statement. That is going to be very easy. That I am covering in the next slide. Okay, so what is the net profit statement? Net profit, here we are not going to bifurcate product wise. We can consolidate and make one column because it's a net profit statement. It's nothing but your P&L. So P&L, what is the topmost line item? Sales is the topmost line item of your P&L. 4,53,000. We have found the sales in our previous slide. Okay, sales for the BXC and sales for the DXC, just total it will come to 4,53,980. And cost of sales, yes, we found 1,57,000 and 2,26,000. Add it, cost of sales will come 3,83,000. So total sales minus cost of sales is going to be the 70,980. It is the gross margin. So gross margin, you can also call it as earning before interest and taxation. So which means we have to reduce interest component from it to find the earning before taxes, and then reduce the taxes component from it to find the earnings after taxes. Earning after taxes also you can call it as net profit in this scenario. Okay, so we have the earning before interest and taxation. Do we have any interest? Yes, we have interest. The fixed capital or the fixed asset is financed by 11% interest loan. Okay, so you are going to 2 lakhs is financed by 11% interest. So 22,000 will be the annual interest for financing the fixed assets. Now then you have financed the working capital also. Half of the working capital is financed by bank borrowing. So you know what is the working capital. We just rewind and see. We have seen the calculation for this 95,750. Here also I have put in lakh, so it is 0.9575. 95,750 into 50 percentage of working capital financed by the bank loan of 19.4 percentage. So 19.4 multiplied by 50% multiplied by the working capital value comes to 9,288. So what is the total interest? 22,000 plus 9,288 comes to 31,288. Now earning before interest and taxation, we are going to reduce the interest component of 31,000 to find the profit before taxes 39,692. And now we have to find the net profit. So 50 percentage of taxes cut and remaining 50 percentage is going to be the net profit. This is the net profit statement, guys. Okay, here I have put the remarks column, or you can also put it as a calculations for this, or you can put a separate table for how the calculations is going to come. Okay, so yes guys, so this is our agenda for the day, and we are done with it. So meet you shortly with the next video. In the next video we have to cover upon the additional problems of marginal costing that is given in your book. I think 40 plus problems are given in your book. I will start working out that for you. Okay, so stay tuned guys, all the very best.